Hi, everybody. Welcome to the Bitcoin Embassy. My name is Eric Spano. My background is in accounting and finance, and a couple of years ago I decided to start learning a bit more about Bitcoin because I was a bit curious and didn't really understand it, so I wanted to increase my knowledge, and I just became hooked, and I wanted to get involved. I started to meet people who were involved in the space, had their own businesses, were working on their own projects, and it inspired me to get involved. Which is also kind of the reason why I wanted to get involved with Junto, because I think that it's a great idea, and I'm happy that you all came out tonight to learn something new. So, I'm going to explain to you at a very high level what Bitcoin is and what it isn't, and then I'm going to go into some of the reasons of why I think it's important, and then I'll get to some questions. So to begin, what is a Bitcoin really? In the media, we often see pictures of physical Bitcoins, but it's supposed to be a digital currency. So I want to just clear this up right away. Bitcoin is not a company. It's not necessarily owned by anybody. It's not even a physical coin. What it really is just a technology and a protocol, and ultimately an idea. And it came to be in 2008. The origins of Bitcoin can be traced back to a technical white paper, which is, at the time when I first looked at it a bit, and still is actually, a bit over my head. But the paper was written by a pseudonymous, mysterious person who still has not been found or discovered. No one really knows who he is, named Satoshi Nakamoto. And Mr. Nakamoto put together a paper called Bitcoin, a peer-to-peer electronic cash system, in which he proposed a sort of a protocol, so to speak, or a way for money to be transferred digitally without the need for a central authority or a central clearinghouse, and ultimately it would become a currency that wasn't issued by a central bank or any central authority, but whose rules and whose creation was predetermined. So in order for this paper to become reality, it had to be developed into a software. And ultimately, Bitcoin, if you have to kind of explain what it is it's three things, and I'll go over those quickly right now. The first thing is it's a payment network. It's a network supported by all of the users who decide to install the software on their computer, which are sort of the Bitcoin miners you see over there. Although in the beginning, it could, and still today, the software can be run on any computer, Windows, Linux, Mac. You can store the entire sort of ledger of transactions on your computer and participate in securing the network and ensuring that it stays online and working. So it's not stored somewhere in a bank or in a central place. The network is distributed, kind of like BitTorrent, which is why it can't be shut down, because if you take one computer out of the equation, all the other ones still have all the information backed up. So Bitcoin became an international payment network that is distributed and hosted on computers around the entire world. But a payment network isn't particularly useful if you can't transfer anything through it. So Bitcoin is also a digital currency. Now Bitcoins, with a small b, to play semantics a little bit, is the unit of currency, similar to dollars or euros, that are transmitted through the digital payment network. This is the currency that is widely traded, and the value is watched by a lot of people. It's fluctuating wildly. So this is usually what we're talking about when we talk about Bitcoin. It's the currency that's being traded. But the most valuable part of Bitcoin is really the distributed transaction ledger. So how Bitcoin works fundamentally is all transactions are recorded in a permanent ledger. So at any moment in time, you know exactly how many Bitcoins are held at a specific address. And anytime you transfer them, the transfer is seen by all the computers or all the miners on the network, and it's broadcast to everyone. So now, what this means is that transactions can't really be reversed, and they can be instantly validated. So you have a network that can kind of sustain itself. You don't need to hire people to manage transactions or to look over disputes, because the miners are incentivized to record all of these transactions. And that is how the currency is generated. So to draw some parallels between Bitcoin and traditional currencies that we're used to, Canadian dollar, for example, doesn't have a fixed supply. There's however many are generated, or not generated, but printed or created by the government or the Central Bank of Canada. Bitcoins, from their very beginning, were predetermined to have a quantity of 21 million Bitcoins. And they're to be distributed over time as transactions get processed, which means it's sort of the opposite of the money that we're used to because the supply is fixed and we know how often it will be created. So Bitcoin miners are essentially the core of all of this, and they process all of these transactions sort of every 10 minutes, and essentially it creates a payment network that doesn't have a central entity. So I want to give a quick example to put all of this together so that we can see how it works. But before I do that, I just want to see if there's any questions at this point before I start going off into another topic about anything that I've spoken about so far. Yes.
Well, you said that all transactions are recorded and transferred to everyone. Wouldn't that, in 10 years from now, make a huge amount of data to be transferred back and forth between everyone?
Yes, it would, and it already is sort of large, so it does take up a bit of space on computers, which is why there's specialized machines now that have dealt with that, so it has evolved over time. But yes, it ultimately does create larger databases for the transactions to be recorded in, and there's various ways that people are trying to deal with that now, but they're working on solutions, which is one of the things about Bitcoin that's different from a lot of other payment networks or technologies, is that it's open source. So there's a lot of different people working on it, trying to solve a lot of different problems, and it's basically up to the community in that sense to try to find solutions, which is why in some ways problems get solved a bit more quickly, but in some senses like that, there's a lot of development to try and solve these issues. Are there any? Yes.
A little bit of a more higher level question and just your opinion on something. Obviously, there's 21 million bitcoins, so that the finite number of bitcoins, is that maybe the reason for the volatility? Like, what are your thoughts on the fact that somebody can literally buy 5%, somebody with a lot of money, like the Winklevoss twins or something, can buy a whole bunch of them and flood the market and then, make it into a tailspin? So just your thoughts on that.
Yeah, so in terms of the price, which I'm sure if you sort of tune into any of the Bitcoin-related news, it changes a lot. To give you a bit of context, when the currency was first released in 2008, it didn't really have a value. It was traded sort of privately over the internet. It wasn't widely traded. As time went on, the price went to $30, back down to $2 to $1,200, back down to maybe $80, and back up to a couple $100s now. And it's exactly, not necessarily for the reason that there's a fixed supply, but because it's still very thinly traded. It's not as easy as going to buy a stock, for example. There's not as many out there, and there's not as many people trading it. So that does contribute in part to the volatility of the currency itself.
Is there an advantage for the limited supply, and why
21 million, there's a few theories around, but it's mostly just, it's mostly arbitrary. There's no specific reason for it. However, in terms, the first part of your question, sorry?
Is there an advantage for it to be finite?
So one of the big economic questions that Bitcoin brings up is it challenges the traditional thought of money supply, where to fight inflation, we'll print more money. The very oversimplified version of that economic theory. Bitcoin is the opposite of that. Bitcoin is more similar to gold, whereby having a fixed supply, since it's scarce, it should give it value, because over time, well, you can't just create more if everyone has all the Bitcoins that they have. So it's very much an economic debate, but the goal behind having a fixed supply was that so you're trusting, in a sense, in mathematical equation that was determined at the beginning of the currency, rather than sort of the whims of whoever is in charge of the monetary policy at that time for that currency. So it's sort of to act as a check and balance. And with Bitcoin, really, what the main goal of the whole technology is to eliminate the need for excessive amounts of trust. At its core, whether it's for currency or other applications beyond that, it's to eliminate the need to trust one person or one entity, and to have a system or a network where you distribute your trust. So you don't have a central point of failure. If someone wants to be a bad actor, it doesn't have an impact on everyone. And the first application of this was for money. So to say, well, we have a currency now that is wildly volatile relative to traditional currencies, but in and of itself, one Bitcoin is always one Bitcoin. And no one can come in and just make more out of nothing. And that's sort of from a currency standpoint, that was the idea behind Bitcoin. Now, just want to go back a second to the ledger that I was talking about earlier. So all Bitcoin transactions are recorded in a ledger that is viewable by anyone. So how it works, if you want to have Bitcoins, you need something akin to a bank account, which is a Bitcoin address. These can be generated on any computer. You don't have to sign up for one necessarily. You don't have to really do anything other than have a program on your computer that will generate it. Once you have that, you have an address that you can give to people to send you Bitcoins. In order to redeem them, or to spend them, you have the equivalent, sort of like signing a check. It's called a private key. This gets generated with your address, and then only you have access to that. If you give someone a copy of your private key, they can spend your Bitcoins. And this is what happened at a few places over the past few years, notably Mt. Gox, which was the Bitcoin exchange that disappeared with everybody's money. This happened because the private keys to everyone's accounts were stored by the company who generated those wallets. The people who had Bitcoins didn't actually have their Bitcoins. They could log into their website and see the balance, but they didn't have ownership of the Bitcoins. And this is something that's really, ownership is a concept that's very important in Bitcoin, because to really have your money, to have cash, you have your $20 bill. You have it in your hands and you know it's there. When you have money in your bank account, you have access to it because you can withdraw it. With Bitcoin, you really need to have that private key, and that's what gives you the ownership. So when you see things like Mt. Gox or people that get their Bitcoin stolen, it's generally due to security issues with the private key and not necessarily a flaw in the technology itself. It just, with great power comes great responsibility, and to have full control over all of your money, you need to take some security precautions in that sense. Yes?
Once all 21 million Bitcoin are distributed, how do they plan to incentivize people to maintain the ledger?
It's a very good question. So I'll give it just a bit of context before answering that. So in order to send a Bitcoin transaction, how it works is you specify who you want to send it to, their address, similar to the email address or bank account number, and you sign it with your private key, and you broadcast it onto the network. Now, all the miners, all the people who have these computers that are looking for all these transactions to try and process them, are all competing to group all the transactions and solve the cryptographic algorithm first. That will allow them to claim, I have all of these transactions that are valid, and I've met the criteria to solve this equation. And it's oversimplified, but we're not going to get into too much cryptography. And then they broadcast it. And then they receive in return for that service and expending the energy to gather all those transactions, Bitcoins, because they're being newly generated. Over time, there will be no more Bitcoins to give out for doing that. So then there's transaction fees that will be paid, and that are paid now, but they're very minimal, around 5 cents per transaction or so. In time, it is presumed that the transaction fees will increase to incentivize the miners. However, the way that the supply has been set up, there will be no more Bitcoins to be mined in 2140. So we'll have a bit of time to see what happens until then. But the idea is then the incentive structure changes and people will pay more fees, which is why Bitcoin in and of itself, in terms of a payment network today, strives on being fast, cheap, and efficient, but in the long run will probably be very useful for higher value transactions where you're sending very large amounts of money rather than the microtransactions. Which brings me back to another topic that I wanted to address, is there's a lot of other coins that exist. And this is something interesting about Bitcoin, and also what makes it an important idea is the fact that if you think you have a better idea for a currency or a better way for it to work, you can take what has been done with Bitcoin and modify it to your own needs. There's an inherent competition, in a sense, to try to make it better and to improve, being an open source technology. So if you, for example, if you have an issue, we'll stay with currencies for now, but if you have an issue with the way a central bank is managing its monetary policy, you can't go and create a new currency for that country and get people to start using it. In the digital currency realm, you can change all the parameters of the currency and make your own. Now it'll only have value if people want to use it and if there's trust in backing it, which Bitcoin has developed over the years. But if you don't think that 21 million coins is enough, well, there's other ones that have way bigger limits. If you think that 10 minutes to fully process and confirm a transaction takes too long, there's other coins, such as Litecoin, that does it in a quarter of the time. So you can alter a lot of the parameters, which in the end makes people kind of strive to find what improvements can be made and try to come up with something new. So if you see different coins that exist, altcoins as they call them, this is just people experimenting with new ideas that may or may not one day eventually be brought into and used in Bitcoin. Yeah.
Stupid question. I'm really good at this, so bear with me. 21 million Bitcoin. Canada alone, we're 35 million people. We're 7 billion people on this planet. So how does it work? Is it fixed unit, or can you divide that unit to decimals, or how does it work?
Bitcoin is divisible to 8 decimal points. You can break it up quite a bit. And if necessary, that can also be changed as well within the core software. But for now, it's divisible to 8 decimal points. And there is some debate whether it should be 1 Bitcoin or if it should be called, like you have 1 millibitcoin, which will be 0.0001. But there's a lot of semantics, but it's really divisible way more than sort of when you try to use it. It's kind of hard to spend 25 cents worth of gold to try and break something up or make those small kind of coins. So Bitcoin is sort of, in that sense, a digital version of that with some other features as well. But the fixed supply is what's more important, not necessarily the amount of Bitcoins that remain. So what I was going to do is just show you a quick transaction on how this all works. And on this next page, I have a Bitcoin address and a QR code to scan with my phone. Now, this Bitcoin address belongs to my brother, who lives in Connecticut. And just by going onto my Bitcoin wallet on my phone and scanning his Bitcoin address, I can send him maybe 25 cents.
25 cents Canadian dollars? Or 25
Yeah, 25 cents Canadian. I mean, it's going to be 0.0099 Bitcoins, and it's been sent. So, yes. Okay. I didn't know that, yeah. Yeah, it's a 0.0, yeah. So it's not even a full cent in fees, and I just sent 25 cents to the United States. And he can receive it on his phone or on his computer, redeem it, and spend it kind of anywhere that accepts it. But the whole idea here is now you have a payment network that kind of acts in a borderless way, and that acts in a near instant way, and in a cheap way, such that today for us, I mean, I can go and send email money transfer. We live, luckily, for Canadians, we live in a very well-developed banking sort of financial system. We have good access to transfer money and receive money. But in a lot of developing nations, it's very expensive. And it's not scalable for a bank to go open up a branch over there. So they do a lot of mobile sort of transactions, which work on cell phones. And Bitcoin now is being developed and trying to be used as a way to have low-cost transactions in areas where they don't have as much access to a financial system. So sending 25 cents is just a little bit of an example of how that would work. But you can send any amount, and the fees don't increase necessarily more than a few cents. Not a percentage fee or anything like that. So I'll come back to, I know there would probably be a lot of technical questions and stuff like that, but I want to just emphasize on a few key reasons as to why a technology like Bitcoin matters and why it can be important. So by having, okay, yes.
I'm sorry.
Yeah, no, go ahead.
I don't mind. Question, and something that bothers me. It's, I've heard you talking about gold as a parallel. You were drawing a parallel with gold. We are talking about currency, which is a whole different word. So I mean, I was wondering where Bitcoin wants to stand, because one thing is to be a monetary tool, which is the case of a currency that you can do a quantitative easing. You can have more currency, less currency. So it's a monetary policy that is decided by a central government. Other thing is gold, which is a finite material that some people think is beautiful, so therefore we give a certain value. And other people think there's a good inflation hedge. But they're not the same. gold and currency, although gold was used in the past as currency, nowadays are very different animals when you're talking about finance and where Bitcoin wants to stand, what Bitcoin wants to be.
So it's a very good question, and I guess throw a lot of these terms around almost interchangeably. Really, Bitcoin is not so much about a currency or sort of a commodity. It's more really just about value, because Bitcoins that are traded through Bitcoin payment network are treated as a currency today. You try to spend them. Some people hold them as an asset. So Bitcoin today is kind of all those things. It really depends how you use it. But really, anything can be transferred over this kind of network in terms of sort of property rights or things that you have ownership to. Because what you end up with this sort of distributed ledger is an irrefutable record of ownership that can't really be doctored, in the sense that you can't just create new Bitcoins, therefore you can't enter new entries into this ledger. And that means that for now we're using Bitcoin as a currency, we're using it as a commodity. This is sort of the first application. There's a lot of people that are working on saying, okay, maybe as a currency, we'll have a debate and we don't think that having a fixed supply is good, or we don't think that being deflationary is going to be sustainable over time. There's much to debate from the currency aspect, but the core really of Bitcoin is the blockchain, which is the ledger that stores all the transactions. So for today, when you look at the blockchain, it'll say this address of 16 characters that you saw before transferred 5 Bitcoins to this address that's equally long and not memorizable. But what that is really is a proof that one address transferred ownership of something to another. It's Bitcoins today, but it could be property title. And now you have a registry of property titles that can't be manipulated, can't necessarily be destroyed because it's distributed over a wide network of computers around the world. So this concept of a distributed ledger or a blockchain can be applied to many things beyond currency. Currency was just sort of the first application of Bitcoin technology, or the blockchain, so to speak. And a lot of research and a lot of time is being spent on figuring out, great, but what other problems can it solve? So for example, to get into more recent sort of financial crisis, one of the bigger problems, I guess, with a lot of the issues that have been happening in the financial system in the last few years is not so much that transactions are not being recorded. Well, it was that they're not being recorded. So you don't necessarily know, if we're talking about more derivatives or things like that, who actually owes who what. Or a lot of things were not being recorded. So if you have sort of a ledger where all transactions of any type of asset need to be recorded, you can always refer to that. And you can't necessarily, you can't manipulate a record like that. So the blockchain is sort of the core of the technology that can be used beyond currency. And that's ultimately why Bitcoin matters, is that we create payment network, new type of currency that kind of challenges the status quo and makes us think a little bit about the way we sort of operate in our daily lives financially. But a lot of people are trying to come forth and think of new ways that something decentralized, where you don't need to trust one central point of failure or one person to manage everything or record everything. And so that's kind of where things are heading. Yeah, David.
So you're talking about trust. Before you said, so let's say on your computer you have a key, right?
Yeah.
So let's say somebody in the room is a very good hacker. He gets to your computer, internet, whatever, he gets your key, he can empty your bank account, kind of, right?
Yes.
So and that's not refundable, and there's no way you can get your money back, right?
Yes.
Whereas, the way I see it, let's say I lose my credit card, and some guy empty my limit for the day, the bank's gonna refund me. So,
which is true, but the flip side of that, in a sense, is that there's always a cost to security, whether it's Bitcoin or credit cards or banks. The fact that someone could steal your credit card and spend it and you'll be refunded, or someone can steal your debit card and withdraw money from your bank account, the banks exist to safeguard you from that. Now, Bitcoin, sort of in the core of its like very early beginnings, sort of we see today, is like if you keep a box of cash in your house. That's why you go to a bank. So the whole thing with Bitcoin is there can be services that help you with that, but you don't need to necessarily fully trust that you've given complete ownership of your money to them. So what I mean by that is with Bitcoin, you have that key, like I told you, your private key. With that, you can spend your Bitcoins. What's the cool thing about Bitcoin is that you can require multiple keys to be able to spend Bitcoins from that address. Kind of like you need multiple check signers to spend a check from a bank account. So for example, now, if you go to a bank, a Bitcoin bank, and you say, look, I want to keep my Bitcoins here to keep them safe, but I still want to be able to know that I have access to them, you can split the keys such that they can't take your money out without you, and you can employ different types of safeguards to make sure you'll be able to get it out if they refuse to use your key. So you can kind of need 2 out of 3 keys to be able to spend them, such that now you know it's safe because no one can take it out of the bank without your key. So there's always an element of security, for sure. It's not a foolproof way, but the security, the onus is on us to make sure that we take proactive steps to secure our funds or things of value.
The way I see it, it's still a key and it's recorded on a computer, right? So then, even though it needs 2 keys and it's recorded on the computer of that bank, then same thing can happen then.
True, but if it's not online, it makes it a bit more difficult. But yeah, there's different ways that it can be compromised. It's just there's different ways to try and secure it. It's not just one key necessarily, but regardless, there's a cost to security. The point that I was trying to make is that we're trying to reduce those costs, and we're trying to reduce the sort of the amount of trust that you need to put in to have that security. Yeah.
I think you can, like, when you buy an algorithm, and you can store it on a USB key, so if you light it up, it's only on the USB key. So
well, you can, I mean, ultimately your private key to access your Bitcoins is a long string of numbers. You can store it on a physical coin, like we saw earlier. That's just a coin with a private key stickered onto it. You can store it on a piece of paper and never actually save it on a computer and just always sort of type it in if you need to sign a transaction. You can break it up into multiple pieces and hide them in different places. There's flexibility in terms of what you can do. It's not a 4-digit number that you have to memorize. It's a long string that can be transformed into a QR code that you scan. There's a lot of different ways of doing it, but ultimately, depending on how you secure it, it could be more vulnerable than other ways, for sure.
You said you print the key, so it's not like a PGP key where it's
it's the same idea, but it's it depends on how it's encoded, because it could be a smaller string of numbers than the big sort of seed that would be generated initially. But it's very similar to that type of encryption. Yeah.
I have a question. It's more of a social impact.
Mm-hmm.
As we listen to you speak, we also hear, the computer run, and it seems like to be able to mine and receive Bitcoin as a reward for solving certain puzzle, it requires a lot of energy. So perhaps it's not as green or eco-friendly, especially as I think Fred is your name, sorry. Yeah. You were mentioning how much data, and if it registered every single transaction out there, and every time you have to go through it, I'm wondering. I was reading an article. So the approximate cost for last year was about 100 million worth of cost of electricity. We use the average residential rate in the U.S. Perhaps here it's a bit cheaper, but wondering if as we go along towards that 21 million Bitcoin. What are the different steps that the community is taking to that, it's not just a consumption of or waste of energy out there? So
that's a very good question, and a bit of context again before getting directly to that. The reason that these computers expend so much energy is because there's more and more of them on the network trying to compete to be the first one to be able to broadcast those transactions. So the way that Bitcoins are generated is by solving cryptographic hashing algorithms. Now that's very computer intensive. Other alternative coins do away with that altogether, and they have a different way to generate coins. So in Bitcoin, mining is known as proof of work. So you get Bitcoins in return for proving that you have done the work to solve the cryptographic algorithm and get Bitcoins. Now, it does take a lot of energy, and so far today, it's the most effective way to be able to secure all the transactions while at the same time making it difficult for anyone to just come in and take over the network and sort of control all of it, because there's a cost to obtaining that many chips and taking over the network. So for today, it's sort of the best of all the ways to do it. Over time, yes, not the most energy efficient, and chips are becoming more efficient, so they consume a bit less energy, but ultimately it is a problem that won't really go away because of the way that they're being mined. So there's a lot of people that are looking at different ways of doing that. So instead of a proof of work that takes up so much computer energy, people have come up with many different alternatives that you can look into. Some of them are called proof of stake. Some of them don't really use mining at all, and they go away with other ways to try and distribute funds or the coins that they have. Ultimately, mining is similar to just sort of printing money. There's different ways of doing it, and for Bitcoin, this is the way that works. And for digital currencies, it's the most widely used. So hopefully over time, there are more energy efficient ways, and people come up with different alternatives. So some other coins have, just hasn't been implemented in Bitcoin. So it's something that hopefully we can come up with a different way to have the network secured and coins distributed, but at the same time, if you're using computers, it's always going to be energy intensive.
I guess just a follow on, if I can allow myself that. So basically, it's a cost and benefit, right? If at a certain point we invest in these machines to try to mine Bitcoin and make it a profitable, venture, if it's too costly because of the energy input, you would probably just stop your machine and maybe wait for a certain environment to turn it back on. But I guess the central value to Bitcoin, in what I understand, is the decentralizing the currency, and hopefully have a lot of people being able to do that from their home. But if it's all about able to generate computer power, perhaps that will become more centralized to a lesser number of people that eventually will control something that purpose was at the beginning to be decentralized. Do you feel that that's a big risk, and what are things that are being done to try to prevent, if we could prevent, or it's just something that it's part of the beast or the animal?
Yeah, so as time has passed, at the very beginning of when the Bitcoin network started and people were mining, they were doing it from their laptops, and people with a computer could actually anticipate to earn Bitcoins by using their laptop because there weren't a lot of people doing it. There wasn't a huge amount of mining power or hashing power, is called, being used. So as time has passed, it's become a nuclear arms race. People are trying to invest as much money as they can to build the fastest chips and control most of the network. So it has become way more centralized than it was at the beginning. It's still fairly decentralized, but that is an issue that a lot of the core developers discuss, and people are trying to find ways to mitigate this, because over time, ultimately, it could end up being 4 or 5 big data centers around the world that are mining all of the Bitcoins. So it's a problem that's been widely acknowledged, and it's again, it comes back to mining is the best sort of solution that's come up so far. And I guess as a disclaimer, Bitcoin itself is way in a beta stage. It's still a very experimental kind of technology. So this is the kind of stuff that needs to be discussed and looked at, and hopefully over time there's more efficient, or at least more accessible ways for people to mine or generate coins and secure the network without having to spend millions of dollars on computer equipment and data centers. Yeah, hey.
I say something for the energy efficiency.
Please.
Here we heat the place with the miner. That's why we have miner in every floor, so that way we're not really losing that energy. So instead of heating with the heater, we heat with that.
It's good for Canada.
It is. It is. So that's great for the winters, for sure. Are there any more questions? Hey.
If I buy Bitcoins today and tomorrow it goes, I resell them with the capital gain, what are the taxes on that?
So the CRA has been pretty clear about what the tax rules have been pretty early on, actually. Canada was one of the first countries to issue guidance on that. So it's treated as a capital gains on regular investment.
Which is 50%
Of
like a house.
Yeah, not like a house, but it'd be like if you're trading equities. Unless you're doing it as a business, then it's treated as business income. So if you're buying and selling sort of as a passive investment, then you would pay 50% of the capital gains tax, 50% of your gain. And if you're trading it very actively, sort of as a profession almost, that's what you're doing, then it would be treated and taxed as a business income. But it is sort of on the radar of Revenue Quebec and, well, Revenue Canada. Revenue Quebec hasn't issued an opinion, but I guess pretty much follow that rule and you'll be all right. But it's capital gains taxes.
Just to complete your question, I guess part of Bitcoin is to be anonymous, or part of the transaction. And I just wonder how much the CRA can track the transaction and know that, oh, by the way, you bought at 40 and sold it at 200, etc. I mean, that's kind of volunteeringly, hey, I'm going to pay tax on it. But at this point, is there any process or anything that I don't know, the wallet or the exchange can give you statements or send it directly to the government? I don't know.
So, I mean, Bitcoin in its sort of earlier times was seen as this anonymous currency that can be used for all kinds of things. And ultimately, it's not really that anonymous at all, depending on how you use it. It could be very easy to see where Bitcoins are going. You won't necessarily know who they are, but again, the transactions are public in nature. You can look up an address and see what's going on. So not necessarily a good idea to do that and try to sell them and not pay your taxes. But as the industry develops, there are exchanges now that are registered with FinTrack. So if you sell Bitcoins there, you can get statements from them. You can reasonably assume that you should pay taxes on those because it's a registered and licensed business. So it's like with anything. You can and cannot. It depends on how you treat it, but it's not any particularly better than something else to try to avoid that. No.
What is the development cycle of the Bitcoin protocol? Are there people developing and changing the core of the protocol, or are they only creating new libraries, new ways to use it that are separate from the actual Bitcoin protocol? So
the sort of the core implementation of Bitcoin doesn't really go through radical changes frequently. It's a it's a longer development cycle. However, there's a lot of you can build a lot on top of it. So there's a lot of active development going on to add new features, and sort of anyone can plug in and do it, and then people can start using it right away. But the core functionality, so if you want to increase the limit of Bitcoins or change those functionalities, that is not something that's changed very easily without debate, but the adding different types of functionality on top of it, so different libraries and things like that is done pretty quickly, and there's a very active community of developers. I'm sure a couple of people here can speak a bit better to that point, but the non-core functionalities there's always features being added to it.
But is the core being modified at all?
It's being maintained, and there's a group of core developers who started being paid by Bitcoin companies who received a lot of venture capital funding, full salaries to maintain that and to fix it up. Because from the very first version, the Satoshi Nakamoto who developed it, it has gone through a lot of changes, and there's been a lot of developers working on that. Now we've reached a point, I don't know what version, do you know what version it is now? And it's a longer process for those ones, but it's being maintained by a core group of developers.
And how is it being updated on all the machines that use the protocol?
Yeah, so they basically have to get all of the miners to use the new version. Otherwise, it could create something called a fork where, we'll wait. It could kind of break it. And that actually happened in 2013. There was a period of time for a few hours during the day where some Bitcoin miners were using the old version and some upgraded to a new version, and it created a rift in the system where, now there was two blockchains, and which one is the real one, and it caused a bit of a scare, and everyone came together and the developers issued a new version to all the miners, and within a few hours it was resolved, not without a lot of panic and a huge spike in the price at that point. So it just kind of exemplifies the growing pains of a technology that has no central authority to it as well. There's always the pros and the cons, and the fact that it's still around after I guess now it's been, what, 7 years almost since 2008, is a testament to the will of the people who have been working on it, but it also, it's a long way to go before it matures into a technology that will be super widely used, which is why people are looking for very specific applications today to try and solve different problems beyond currency that a distributed technology could help. Yeah.
Some of us here are in investment banking, but I'm just thinking about venture capitalists and all that. And Bitcoin, it's a new technology. It was said to be very disruptive. Just wondering, I'm hearing numbers of 100 million in 2013, $300 million that was invested in the ecosystem of Bitcoin. Now, how disruptive is Bitcoin, and where do you see it going, or what models that in the past worked, like Western Union, might be Bitcoin might be such a great threat, and they may go out of business. Can you share a little bit of what how that really matters to us in everyday life?
Sure. One of the more sort of disruptive business models or use cases for Bitcoin that a lot of companies have been starting to work on now and are trying to solve is the remittance problem, which is transferring money from one country to another, but the less financially served countries, so to speak, where today, using companies like Western Union, you have fees in excess of 10%. In some places, it's even higher, just to send even $50 back to these countries. So what ends up happening is people turn to Bitcoin and say, how can we use this as it's international? It's this international payment system, and that's where a lot of VC money is going right now, to try and say, well, how can someone who lives in the U.S. send money to the Philippines without having to pay an exorbitant amount of fees? And right now, I think I use the Philippines as an example because there's quite a few companies that have started doing that and have already dramatically cut fees for people remitting money back there using Bitcoin. And of course, it involves similar to a Western Union business model, someone here taking money, dollars, exchanging them Bitcoin, sending Bitcoin over there, and then it being exchanged over there. So it really leverages the global exchange market. But the biggest sort of disruptive use case is now saying, well, hey, we can send money very easily to these countries. Let's start doing it and enabling everybody to do it so that we can reduce all of the costs that are caused by the system that exists now. Yeah.
Just an interesting point on that is, I've been studying Bitcoin as well for a few years, and just a personal opinion, but I understand everybody's very about the transaction fees. I work in credit card payments, so I'm the devil here. The issue with Bitcoin is that it's great because it's free and you don't pay. It's a low cost way of sending money, but then in order to use your Bitcoins, most logically is that you need to exchange it into your local currency, just because it's harder to spend your Bitcoin, and a lot of people are taking advantage of that process, which is to exchange the money and charging upwards of 5-10% to the exchange. So in fact, it actually sometimes is more expensive than using a credit card or other methods of payment. So I guess my question or my point here is, what are your thoughts on, although it's decentralized, it's actually getting people that are very greedy to go into this and kind of overcharging for something? Yeah, and that's not the business model of what I was referring to. And I was saying there's people that are trying to do this. That's what's happening without the companies that are trying to reduce the exchanging fees. Because if I send Bitcoins to someone in a country where no one accepts them, it's not going to be very useful for them. They can't go and buy food or do anything. So they'll go to someone who will charge them that fee that'll end up being what it would have cost to go to Western Union. So it's what's trying to solve that problem is there's businesses that are saying, okay, well, we're going to buy those Bitcoins, and since we are tapped into different markets to sell them, we don't have to charge a 10% fee because it's not costing us that much. Now, the businesses that are going to charge that much obviously are not going to make Bitcoin an interesting use case for those people because it's going to cost them just as much. But I use the example of the Philippines because there are a few companies there that are doing it now, and it is cheaper than the traditional methods. But that is the other end of the problem, is now you have Bitcoins, great, but where can you spend them? What can you do to transfer them? So that's the other end of the equation that they're working on in these places now, that people here are using them, want to send them home. They need that other end. So it is an issue for sure. There is actually exchanges in I guess Philippines and so forth that are doing it at a much lower cost.
Yeah. than what exists. But this is sort of what people are working on now, because before that, and in a lot of places, that is what's going on. People are having to go elsewhere, ATMs and things like that, and they do end up paying more fees. Sometimes less, of course, or they wouldn't do it, but yeah. So that's what's trying to be developed, is a more simplified network to do that.
So what's the incentive for, well, first I'd like to ask a question, like how many people own Bitcoin?
Who owns Bitcoin here?
I think a lot of people don't want to answer.
It's anonymous. It's a
I
few.
don't own any Bitcoin. So what's the incentive for like for the adoption, like say for a retailer, or like what has been so far the biggest use of Bitcoin? Is it just for like international transfers, or like for what's like, is there like a record of like the largest transaction, or like the largest like domain of application?
It's a good question. I'm not sure in terms of which merchants are accepting Bitcoins, which ones have seen the most sales. A lot of the companies, Tiger Direct and the electronics companies, Dell, who have started accepting it, have done a lot of sales overstock as well. It's people who have Bitcoins that were starting to spend them. I'm personally of the belief that merchant adoption and getting people to accept Bitcoin isn't really the most important thing right now, because it is oftentimes still, for most of us, easier to use a credit card in a sense. So I think there's a lot of other parts of the technology that need to be worked on before I go down the street and go pay at a restaurant. I also don't want to spend my Bitcoins, so there's that too. But in terms of merchant adoption, I think online is a better use case for Bitcoins, because now I don't have to use a credit card on the internet. I don't have to worry that maybe my credit card number will get stolen, or I don't have to send more information than I need to. If I'm buying a digital product, I mean, I don't need to give my address, and no one's shipping anything to me, so it's nice to be able to just send money and not have to go through all of that stuff to buy things online. So I would say that's, sorry?
You're referring to like getting access to specific service or specific...
Yeah, or for example, like any digital service, just in terms of privacy, there's no need to provide, well, there is, because you have to use your credit card to provide billing information, but I mean, we've seen it happen to Target, happens to a lot of companies. You could get hacked. So it's just a way to say, if you want to spend Bitcoins online, well, hey, you only send the money, and you don't need to provide more than your email address. So that's kind of what I think is a good use case for it. But in terms of actual merchant adoption, it's fun to get people to say, oh, you accept Bitcoin. Like, what is that? I want to hear more about it. But in terms of being practical, like, no, right now, that's probably shouldn't necessarily be a priority in my opinion. But I still think it's great that at least it kind of spreads the word in that sense. But I think its online use case for spending, for me, is the most compelling reason to do it. Subscriptions and stuff. Hey.
And online, there's a lot of time the commerçant give you like a 15% fee, like a rabais.
Discount.
Yeah.
Maybe you've been on that. Because every transaction is recorded in the chain log.
Yeah.
Can you do a statistical analysis of that?
Yeah, and there's a lot of people, there's a few companies. One is called Coinalytics, of course. Every Bitcoin company has bit or coin or something in the name. But they're looking at the blockchain, and you can literally go back to the first transaction, and there's tons of analysis that you can do on all kinds of things. Like, for example, Mt. Gox, the exchange where all the Bitcoins got stolen. There's people trying to track, well, where did they go? If you're sort of into data analysis and sort of that type of stuff, the blockchain is full of interesting things that you can discover, because you have an endless amount of data and transactions to go through. So there's a lot of interesting things that you can come up with that, whether it's stolen coins and there's now, of course, it brings up another thing, because first people were worried that Bitcoin was too anonymous and everything like that. And once you start to learn about it, you realize it's not anonymous at all. If I send you Bitcoins now, I know your address, I can put it into a website, a blockchain explorer, and I can see, okay, so how many Bitcoins do you have at that address? What addresses sent you Bitcoins before? What sent you after? So there's ways, of course, not to have to worry about that. There's wallets that'll generate new addresses every time. So if you give someone an address, they won't see all your other ones. So there's ways around that, and it's becoming more user-friendly to have privacy. But in and of itself, in its most like crude form, it's not really anonymous at all. So just to answer your question, not go off on a tangent, blockchain analysis is very interesting, and you can discover a lot from that.
Because I have another question.
Yeah.
For how long people keep their Bitcoins? If there is an interest in keeping them or just transactional?
It depends. There's a metric that's used. It's called Bitcoin days destroyed. And what that means is on a daily basis, you can see how old the Bitcoins that are being spent are. So if someone who had Bitcoins since 2009 spends them today, if you look at that chart, you're going to see a huge spike because it was spent from 1,000 days ago. The coin that was originally, the outputs that were already there. So you can kind of track that, but it's really hard to say because there's a lot of transactions that go on. So if you look sort of at the breakdown of how many addresses hold how many Bitcoins and have they moved a lot, a good chunk of them haven't really moved much, so to speak. There's a lot that are just sitting there, whether people are holding them or they lost their private key and now they can't get their Bitcoins anymore, which happens. And I don't know, it's probably happened to you guys too. I've lost access to some Bitcoins in the past. I forgot where I saved the key or something like that. So it can happen, but it really depends. There's a lot of traders, more so now that exchanges are becoming more ubiquitous and more regulated and people feel safer sending money. I know there's now a US exchange. There's been a few, but Coinbase this week is an exchange that raised a lot of money and now they're licensed. And now if you live in the States, you can send them a transfer and start trading Bitcoins, whereas before you had to send a wire transfer to Slovenia or something like that. So as the market matures, I'm sure that people will hold them less and trade more just for speculation purposes. But I think for the most part, people who buy into the technology and like the idea of it aren't very keen on spending their Bitcoins too much.
Eric,
Yeah.
how are you doing?
Good, yeah.
How about for the formal part, another maybe 5-10 minutes of Q&A?
Sure.
And informal, obviously over drinks.
Cool.
I'll let you guys ask questions if you have more questions, and then we'll go for networking after.
We talked about stores that accept Bitcoins as
Yeah.
means for payment. How do they know I sent $99.99 over there? You talked about, so you covered it up a little bit about anonymous, the fact that it's anonymous, but how did it link it to me? And furthermore, as a privacy concern, I mean, could somebody track all my transactions with Tiger Direct, let's say?
Okay, so to answer your question, I'll just start by saying that Bitcoin is, it's a weird word, it's pseudonymous, which means that no one will necessarily know who you are because of your Bitcoin address, because like we saw, it's just a string of numbers. Well, I don't know what happened to the screen, but they'll know your address. So that's just the term is pseudonymous. Now, for Tiger Direct, as an example, what they'll do, and what a lot of companies, I think most, if not all of the online websites, when they accept Bitcoins, every transaction, so you add something to your cart, you go check out, pay with Bitcoin, they're going to generate an address for your specific transaction, and it's valid for 15 minutes. So if you send Bitcoins to that address, it's the only time it's ever going to be used. They know it's linked to your transaction, and then they validated that you've paid for it, and then, well, they've accepted your payment, and they'll send you your stuff. So if someone is going to be able to see all the money that you've spent at Tiger Direct, if you use the same Bitcoin address always spending at Tiger Direct, there's no way for anybody to know that where you sent it to is Tiger Direct. It's, again, just an address. There's no unique identifier that'll tell them it was to that website. So like if you put up an address, like if you take this one, for example, and you go into the Blockchain Explorer and see the history, this is a new one, I presume. I don't know. Maybe you'll see other transactions, but I told you it belonged to my brother. If you looked at the list, you would just see more numbers like that with little amounts. Unless you knew who it was, you know sort of where it went, but not necessarily. So it's kind of anonymous, but not really. Now, if you always use new addresses, so then you don't really have any link between any of them, then you won't have any ability for someone to say, well, this one's yours and that one's yours. So it depends on how you use it.
But you don't really have to think about it much anymore. Like almost all wallets nowadays, they are a deterministic wallet. So when you first set it up, it gives you like a seed that's your backup. So, and from that seed will be generated like an unlimited amount of address. You don't ever have to think about it. Whenever you receive a payment, it's a new one that's being shown. And Another thing is when you spend money, get change, come back to another address. So like on my phone's wallet, I have like 260 address. Whenever I spend Bitcoin or I receive Bitcoin, it's a new address, and everything comes from the same seed. So you don't have to think about storing many keys.
So just, I wasn't going to go into that level of detail, but just to give a bit of a to give a bit of an overview of that. So this is my Bitcoin address. At that address, let's say I have 1 Bitcoin. When I send it, if I only send, let's say, half a Bitcoin, what happens is I send you half a Bitcoin. That other half a Bitcoin that is here won't necessarily go back to that address. Could go back to another one. So what he's trying to say is there's some wallets that will spend all your Bitcoins every time and then send them to 2 different places or multiple different places, such that you kind of always using a new address. So it's just always new numbers. And we use the example again of a private key as like your PIN or signing a check. When I gave the example earlier, I said you have a public address like this that's assigned to a private key. With 1 private key, technically, you can generate, like he was saying, with the deterministic wallet, an endless amount of public ones. So with 1 key, you can access hundreds and hundreds and hundreds of accounts that no one besides you will know is linked to that key. So if I want to receive money from 100 different people, I could give them 100 different addresses, but still have access to it with one code to access it, in a sense. So these are things that at the beginning didn't exist, and that have been developed over time, over the last few years, such that now the big concerns at the beginning are you don't even really think about it, like he was saying, because you just use it. You wouldn't even know. It's kind of like phones and computers. I mean, unless you're super technical, you won't necessarily know how your hard drive is accessing data. Like, it's becoming more and more just you use it and it works kind of thing. But in the background, under the hood, that's kind of what's going on. Hey, yeah, in the back.
I was just wondering, is it just a question of more computing power and more, I don't know anything about this, more like computing smarts before a consumer goods company or a Nielsen can take what we're now saying is really not traceable data, but basically say, oh yeah, he bought a Tiger Bread. In fact, he bought it 3 times using this and this address. Is that just a question of capacity?
It's hard to say because there's a lot of sort of ways someone can figure that out. So if, for example, if you have an account on one of these websites and the company systems get hacked and it has a list of all the Bitcoin addresses and who spent them, like someone could find out, and it may not necessarily be related to Bitcoin or not at all. So there's a lot of ways that could happen. It depends. I can't really say. But if you only use one address for one thing, or you never link your name to your address, then there is no real way that anyone can find out that it belongs to you. But if you're going to spend on a website and you're shipping it to yourself, well, that's, again, if you're using a credit card or Bitcoin, your privacy is still, you're putting your address out there. So it's not any more private in that sense. The example that I would give for that is, again, digital products, where then you're not providing any information, so you could buy from iTunes and no one will ever know you purchased something from iTunes necessarily. Yeah.
Well, this last couple of questions, like, it raised for me, like, maybe it's a bit naive in this way, but for me, like, Bitcoin, it was like sort of an independent, decentralized system. I guess that was the initial purpose. So like, I'm sort of a bit disappointed that it is sort of subject to regulations of, capital gain, it's being taxed, the way that I'm hearing it, it's not that anonymous, there are ways to split addresses, make it, but like, to be very honest, like, and I'm sure I'm really thinking this, isn't it defying sort of the purpose of things? Is it just because it is experimental, so this currency is really to see how it will react, or is it just me where I'm thinking that the way that all these last questions that have been about traceability, taxability, security, for me, it makes it less attractive. And I think that I'm hearing questions that everyone's trying to say that in a polite way. But,
yeah, well,
but really,
here's the flip side to that, and I don't disagree with you. I mean, it's as it becomes more widely used and more developed, it's the advantages that it has versus what exists today start to disappear because, it's not regulated, but now it's regulated, so, now it's just as expensive and things like that. So I see where you're coming from, and it's true. As it becomes more mainstream, well, yeah, there's no chargebacks. Well, what the hell? Like, if I spend it, how am I going to get it back? So we end up incorporating these elements that exist. The difference, though, is that it exists sort of still to change the dynamic. And what I mean by that is it exists outside of, it's an alternative in a sense. It exists outside of the rule of law such that you can impose restrictions and you can, all of these sort of regulations could be put there, but you can also, if you so choose to do so, still opt out. What I mean by that is if you go to a bank and you want to send money to a country where you're not allowed to send money to, you can't. You are not able to. Whereas with Bitcoin, you still can't send money to that country, but you're not allowed to, but you can, type of thing. So it really depends. Same thing with taxes and capital gains. You make a trade on a Bitcoin exchange, it's a taxable transaction. Now, can you not trade on a Bitcoin exchange? Can you trade somewhere else? Can you opt out of that? Yes. Now you're choosing to opt out of that, so you know you're kind of skipping sort of the law or the regulations. But the sort of interesting element of Bitcoin is that it is a choice and an alternative such that if you use it the way that it's intended to be used and you like a Coinbase and you follow the regulations, it still has some advantages, market like notably less than if it exists with no fees and no this, no that. But if you want to use it that way, you still can. You bear the risks of sort of skirting the law, but you're not forced to do that. You can opt out and face the consequences, but you still have the choice.
So there's a fairly, what you're saying is there fairly is like a gray zone where you can sort of.
I mean, you brought up a lot of points. I'm not speaking specifically to one of them. Like you brought up like taxes and regulations. I mean, ultimately, as it develops, there will be need for consumer protection for sure. Some people will tout that, oh, it's non-reversible, it's great. But as a merchant, perhaps, yeah, you get all of his Bitcoins and now no one can charge you back. It's great. But if you're a consumer, if something happens or there's a mistake with your order, you're going to want to have that. But what it does is it brings that element of a different kind of trust. Now, you don't have to trust someone that they're going to keep your information safe or that this is going to happen. Now you need to trust, well, before you send someone money, are you sure that you should be sending it to them? Is there a risk? It changes the dynamic. But yes, to your point, it's not sort of, it could be, there's a lot of, it's idealistic in some ways. So as you bring in the reality to it, whether fees or this and that, but it's an option. It's not necessarily a replacement. It's just an alternative. And if you want to opt out of certain things, you still can. It's just at your own risk, I guess.
I would just add something to that.
Yeah.
Because I think it's a very important point in terms of the legal ramifications. And the thing to understand about Bitcoin, it doesn't exist in a legal vacuum, right? So there's a difference between different jurisdictions and different countries grappling with how exactly their future laws are going to deal with Bitcoin, and there's a difference between the laws as they exist in any given country at any given time, that being Canada, the US, European countries, South American countries, Asian countries, as their laws exist in terms of criminal activity, in terms of money laundering, in terms of anything else as well, right? So anybody that's transacting Bitcoin and that's doing illegal activities is still purview to the law as it exists. So, just when it comes to, for example, taxes, right? It's your responsibility if you have Bitcoins to declare capital gains on them. If you choose not to, then that is a decision that a person is making, and there are legal ramifications to that kind of decision. So it's not, as the laws are developing specifically to deal with Bitcoin in many jurisdictions, we're seeing how people are understanding the technology and also realizing what's new to the technology that doesn't currently exist in the banking system or in any other kind of business or financial domain. So that's what's different about Bitcoin. But in terms of people doing illegal activities and using Bitcoins as the means to those ends, it still falls within the purview of the law. So I think hopefully that answers part of your question in terms of this gray zone. Right?
Yeah. Well, I wasn't really looking to explore the gray zone. It was really more to say that, it is not as decentralized as it was maybe initially meant to be. That's more what I was pointing out than the gray zones themselves.
So you mean decentralized in the manner, in its capacity? Because it is decentralized in its capacity. in the sense that anybody anywhere in the world, and this goes back to what Eric was saying, is able to transact using Bitcoin, without having to go through a central financial institution. That's its benefit. So it's decentralizing that.
It is, but it's still bottom line being regulated by, all those, like taxes, one of the best examples, bottom line is still subject to taxes.
Yeah.
So that's why I say like, it is centralized, but up to a certain point. So, but I guess that's what's interesting.
Yeah.
Thanks, Eric. I watched your TED talk,
Mhm.
and it was really good.
Thank you.
And there was one part of it where you said that one of the cool application I found was the Chicago Sun, who kind of changed the business model of a newspaper in a way. They started doing it, and maybe it's going to change in the future. But instead of subscribing to a newspaper or following blog where you subscribe or you give the donation once a month or something, then you can read an article and you can like it and they give money to the writer or is it an application?
There's actually a company called Change Tip, and you can send people a tip for their content on Twitter, on the forum, on Facebook. It's an application, and you're sending them Bitcoins. But if you like someone's post, instead of liking it, why not send them 25 cents? So that's sort of the microtransactions that this company called Change Tip and using Bitcoin has been trying to do, is saying you laughed at someone's tweet, tip them whatever you want, and they can redeem it right away, and then they can go and spend it. They can't really buy anything with 25 cents, but if you accumulate them. So that was the whole idea, is you can tip people on the internet. Instead of trying to just boost their ego by liking it, you can actually compensate them financially. So that's a company that's been actually a bit more popular lately. They raised a bit more money. So it's just another use case of having a sort of that type of payment system. So yeah. Hey.
Are loans possible?
Sure. I mean, just like with anything you want to loan it, with any type of money, you could loan it out. Now within the software itself, you can set it up certain ways that you're a bit more secure, but ultimately you can loan out Bitcoins just at your own risk, because if you send them to someone online and you don't know who they are and they don't send them back to you, well, you don't really have much recourse. But you certainly can loan out Bitcoins.
Okay, so this ends the formal part of the presentation. Please join me to thank Eric Spano for his time.
Thank you, guys.
We'll give him a little break, and then if you want to join us, maybe we can go to McGibbon's right down the street.
Yeah, there's no shortage of bars around here.
Exactly.
That's not bad.
So, thank you again.
Great. Thank you all for coming and asking a bunch of good questions. I appreciate it.
Great. That's it.
Cool. Hey, thanks.
Really good.
Thank you.